Welcome to the Times of Industry show. I have a new guest today, but he's very well known on YouTube. If you Google Chris Vermeulen and you avoid the world superbike champion, Chris Vermeulen, you'll reach the technicaltraders.com. Chris Vermeulen, a very reputable, very successful technical analysis trader and investor. And I am having him on the show because everything that's going on right now points to the fact that there's a lot of technical analysis that has to be done. Chris, thank you for clearing the time and being with us.
Yeah, thanks for having me on the show. Appreciate it.
If I go to YouTube, the second largest search engine in the world right now, and I Google either options trading or day trading, I am seeing so many bedrooms of teenagers and people that are 20 to 30-year-olds, and they're all, hey, look at my trading, look at what I'm doing, look at my success. I'm going to open my trading up for you guys. It's going to be a free trial, free options. It's a bubble, in my opinion. This is so much reminds me of
totally
of crypto in April 2017. So in other words, let me say that again. Bitcoin's already out there, so people are making money, but all these altcoins have not come along yet. This is like April 20. It feels to me like there's this bubble is just getting started. It's like a few months of this bananas still to go. I wonder what the charts are saying right now. And I'm just telling you outright, this to me feels so much like a 2017 holy crap bubble. So what do you think?
Yeah, I think you're dead on. I think a lot of people know we're in a bubble, but you can't really fight the market. You've got to stick with the trend. And right now, I mean, the markets in the last 2 weeks, the stock market had a really sharp pullback. It dropped about 6% in one day. And that did a little bit of damage to the chart, and it hasn't recovered yet. It's trying to. But the charts and the sentiment are still pointing to higher prices at this point. And of course, everyone is piling in. You know, people are getting their government checks, and people are unemployed. They don't have jobs. So they're all going online to see how they can make money day trading. And I mean, it's been a market that goes straight up. You can almost buy anything and just hold on to it for more than 5 or 6 days, and you should be, making money. So just like every, bull market top, as everyone seems to pile in right at the end, they get all excited. They do really well for a few months. And then when things roll over, I did the same thing. When things roll over, you get into a bear market or tough times, you give back all the money and then some, and then you realize, oh man, I was so lucky for so long. So we're into that phase where everyone is piling in. Sports betting people are now piling into the market. And I think Robinhood traders got like 3 million new accounts. TD Ameritrade, I think they're probably over 1 million new accounts this year, if not way more than that. I mean, all kinds of brokerages are just taking off with new traders. And that is the sign that the market is overdone. If everybody thinks it's easy and is doing it, it's the last little bit. But bubbles can go for a long time, right? Just like the housing bubble, 2000, the stock market bubble. I mean, things can drag out, and you got to wait till it really pops to play the downside.
You know what's really amazing is that I think the retail traders are not understanding that the government doesn't bail out misbehavior by individuals. It bails out systems. It bails out institutions that are important to the overall system. No one is going to come in, not Jay Powell, not Trump, not anyone, and say, okay, all of these retail traders have just lost a fortune. We need to prop up it's just not going to. We saw it in 2008. They went and saved banks and not under the water homeowners. They didn't clear their credit. They didn't change laws to clear people's credits up. They didn't do anything for the individual. Okay.
I know. Yeah, the financial system really isn't fair. And it's like totally crooked. And there's so much manipulation. And the rules really aren't for the retail end user. I mean, if banks go bankrupt, I mean, you should almost inherit your house. They lost it and you've been paying them. And but it's just the way the market works. And there's going to be a lot of companies that could be getting bailed out here if, like airlines, some of the which airline company, and people are piling into airline stocks thinking, hey, the government, the Fed's going to back them. They're not going to go under, or at least a couple of the big names. But I mean, those companies may get backed, but they might get delisted because, and then the shareholders are stuck with, really, they've lost their capital, because you can't really, I think, have the Fed just pick it up and own it and trade it, because people will just go ballistic and take advantage of what's going on. So a lot of people think they're safe places. The Fed's going to protect them and hold up share prices for things, but it's never that easy. And when everybody thinks something's really simple, I mean, it's usually when you get hit in the back of the head and you're like, oh my gosh, like I didn't see that coming. So, it's crazy times. There's no doubt about it. And you really just have to be very aware of your positions. Don't get overextended. Enjoy this ride, but move your protective stops up, because eventually we're going to have a rollover. Things are going to start to sell off, and things should get pretty ugly.
Yeah, look, I want to ask you a very important question, but just to tell you my idea about this, it looks like the millennials are thinking this is a baby. The government is not going to desert its baby. And that's why we need to bet on the baby. The baby's not going to die. No matter what, the baby's not going to die. And that's how I feel people are looking at the stock market. And it may not die, but it can get a lot sicker.
I was writing an article about it on the weekend, and I didn't end up publishing the angle of it, but it was more or less everyone's piling into the stock market, and they're not worried that anything's bad's going to happen to the valuations of stocks, because they've got the Fed backing them. And you look at it, it's so many millennials just piling in. They don't understand the market fully yet, and they haven't experienced any sell-offs or any market corrections. And they look at the Fed like it's their mom and dad, and they're more or less in the kind of the college phase. Mom and dad will give you the money you need for those books and for that spring break trip. And they see the Fed as the parents just kind of holding the market up, and that's not the way it's going to work. I mean, sure, the Fed's holding it up. They're trying to drive the markets higher, but I'll tell you, when the music stops, the end retail holder of those shares are going to be the ones in serious trouble. And if you don't know when to get out, the problem is everyone falls in love with winning trades. They don't take profits. They don't move their stops up. They just kind of turn a blind eye and they let it sit, because the longer they let it sit, the more money they make, or they think they make. But almost every stock eventually, if you hold it long enough, will turn into a loser at some point during some type of pullback or bear market. And it'll hit the point where you're like, I got to sell this. I can't do it anymore. And so people turn winning trades into losing trades because they fall in love with it. They hold on to it too long, and it ends up getting them way down the road.
Okay, let's talk about something controversial. I want to ask you this. This is at least my opinion, but the bear market. So the 35% down move, the minus 35, the March panics, and this move back up. In my opinion, we should erase all of that from the picture. It wasn't really a bear market, and we're not really entered a new bull market. This is simply an extension of the 2009 bull market. It's still the same bull market. This is the ending phase of that bull market. Do you agree with that, or have we entered a new bull market in your opinion?
I've been writing about it. We're in no man's land. We're stuck between the February high, the March lows. There's a lot of things that have changed. I mean, the fundamentals don't make any sense. GDP and earnings, all those things are down, and they're going to be down. And so right now, stocks are more valued, even though most of the stocks are below the February highs. They're actually more overvalued on a PE ratio than they were before, because now earnings are way down and they're almost valued at the same per share price. I feel as though we're in a topping phase. I feel like we're going to break down eventually. I don't think the Fed's going to be able to just hold the market up, because really the Fed is stimulating the entire world. They're pumping money in. They're keeping the stock markets up. Everyone around the world is benefiting from it. But eventually, if the selling pressure gets too bad, when we go for a potential double dip, as you were saying, go back, test those March lows, I don't think the Fed is going to be able to hold up the whole world starting to panic and sell off. I mean, they dumped a trillion or $3 trillion into the market during the market crash. Stock market bounced for 6% the next day, and then it rolled over and fell like another 12%. I think that was near the bottom anyway, ready for some type of oversold bounce. But when the next leg down starts to happen, if we break those March lows, there's no way the Fed's going to be able to hold share prices up. They can't game the system that much. Right now, it's so much new money, small traders coming in, just constantly just buying. So it's a slow bleed higher. And once all those buyers eventually have spent all their money in their trading accounts and they have no more to buy, they're going to run out of that buying power. And that's when the market's going to stall out. They're going to go on leverage. They're going to be trading their extra leverage they get with their trading account. But once they're done and they're holding all the stocks that they love, I mean, that's when things start to teeter, and that's when they get left, holding the bag, over leveraged right at the market top, and they don't see when they need to get out until it's too late. And that's when I think we're going to slide into this potential big double dip, or even worse, a bear market, which people don't want to go into. But I mean, there are huge opportunities no matter which way things go. And to touch on your point, I feel like we're going to enter a bear market once this momentum stalls out. But if we do break to new highs on the SP 500 and the internals, stocks above the 200-day moving average, a lot of other things start to perform better, I think we could start a new bull market. I mean, it'll be the ultimate wall of worry. That's what stocks climb on. They climb on fear. And for all we know, that's what's going to happen. So as a technical trader, that's the nice thing. It doesn't matter which way the market goes. We play either way. I like a falling market because I think there's a lot of deflation, a lot of falling price value to happen, and prices fall about 7 times faster than they rise. So if we go into a bear market over the next year, you could make the same amount of gains in 1 year as you would in a 7-year bull market. So there's a lot of opportunity to downside. A lot of technical traders, want to see this because it's going to be incredible opportunity.
Interesting. Very interesting on the downside versus upside. I want to ask you about gold and silver. Some of your most renowned expertise is in gold and silver. Let's talk about gold and silver. Gold today, as we're doing this interview, it's climbing. It's about 1770, 1780 at the high of the day. So we're reaching those 2012 highs. Silver is doing very well. And Chris, here's the thing. A lot of Wall Street value investors, like legendary billionaires, they're all like, gold should be 3,000, gold should be 3,500, gold should be 2,500. It doesn't make sense that it's I've never seen so many Great Depression type Benjamin Graham readers, all these people that have nothing to do with gold, Paul Singer, Ray Dalio, Stanley Druckenmiller, David, people that haven't made their billions in gold, and they're coming in and saying, hey, this is nuts. This is so. Yeah. My question, Chris, to you is, what do the charts say right now? Not short term, but are we building a big move here? In technical analysis, there are things that have a 50% probability, 60, 70. To my knowledge, 80 to 85% is as good as it gets in technical analysis. Is there any high conviction trades that are happening right now with gold or silver?
Yes. And I mean, when you look at the long term, we're kind of entering that perfect storm for precious metals. They've been in 6, 7, 8 year kind of bear market or basing formation. The longer something trades low and sideways, the bigger the potential breakout. And gold broke out last July. We played that break, and it's in a bull market, so that is really good. Gold miners, the large caps just broke into a bull market a few weeks ago. The juniors haven't yet, and silver still has not. Long term, once we see silver break out above 21 per ounce, that's when I think we're really going to start to see things go ballistic. That's when miners are going to take off. But really, the stage is set. Gold typically doesn't really lead the way. Usually miners do, but this year or last year, gold led the way because it's not so much Americans kind of piling in to the gold market, but now we've got the entire world panicking with COVID, with currencies falling. I mean, if you look at currencies over the last year and a half, I mean, most of the currencies have been going on a 45-degree angle down. They've been losing value. So where do people go? They go into the US dollar, they go into gold, because those are assets that have been going up, and both of them have been rising. So I think we've got a huge market that could be moving into gold. Still very few people own it, and most people who do own it only own a little bit. The big picture for me, like I see $2,600 gold, a year or two out from now. I don't think it's going to just go parabolic and shoot straight up, but I do see, the devaluing of the dollar. I see gold continuing to move up as a global safe haven. Maybe we're going to see a currency backed with gold. Who knows? So the big picture for gold, is to the upside, and it is leading the way, being in a bull market for almost a year now. And the big opportunity is going to be, I think, in gold miners and silver, both once they can break out of that basing formation.
Okay, that's very interesting. I want to ask you about when the miners, the junior miners, the silver, the more volatile type assets will fall in line. And what I want to ask you is, from a both from fundamental and technical perspective, I see a lot of Wall Street analysts, J.P. Morgan, Goldman Sachs, etc. They're all talking about this 2% official inflation from the Fed. They're saying, look, if this happens, so after 10 years of undershooting this 2% officially, if this changes, to them, this is like a tsunami. This is something that is unprecedented. It means to them that stocks are going to be worth much less. Rates might go higher. Precious metals are going to soar. The dollar is going to collapse. To them, this is a huge deal. Is there any indication on the technical charts that show this correlation with this 2% official inflation? Where is the major count, the resistance for this?
Yeah, I don't follow the inflation so much. I pretty strictly follow price action, because as a trader or investor, if price moves in your favor, that's how you make money. So I focus on where price is going. But you're right. I mean, I think there's going to be a huge opportunity for the metals. The inflation could go crazy, and it's going to really wreak havoc throughout the markets and the economy. So, I think everything's going to rise. I think we're going to see metals really start to take off here, but it may not happen as quick as people think. I think there's going to be a slow burn. This COVID is going to be a really slow burn. I think we could still, really be in trouble this time next year. So things are going to drag out, and companies, businesses, industries are changing, and we're going to see, inflation and all those things pick up over time, big time.
What is your highest conviction trade right now?
I really like gold miners, gold miner juniors, like the GDXJ ETF, which is kind of like the mid cap gold stocks. They are forming a beautiful chart pattern. They're starting to break out this week. They're looking. There's about a 36% potential rally here that could happen in a few weeks if they can break out this week or next week. That's what the chart is showing, and that's what we're starting to see in the markets. We're actually starting to see weekly now, when there's some weakness in the stock market, even just an intraday pullback in, say, the SP 500, we see money quickly shuffle over into gold miners. And that is a really good sign. And when they become seen as a safe haven, then they should be able to at least tread water when the stock market falls. If not, they're going to continue to rally and buck the trend and be the one sector that's kind of shining. And we keep seeing that more and more every week. We see them start to pick up speed when the stock market sells off intraday. And that's a really good sign for them moving higher longer term.
That's very interesting. And what's really interesting about GDXJ is it hasn't broken above the 2016 levels, whereas GDX has done that many weeks ago. I want to ask you in closing about the technicaltraders.com. Can you tell us a little bit about what you guys do over there? What's the service and what's the value in it?
Sure. Yeah. So, all right. So with the Technical Traders, our main newsletter is focused on swing trading, and more or less every morning we'll do a morning video that recaps what happened the day before in overnight trading, in pre-market, and how we expect the markets to move in our positions for that day. So you learn a lot about technical analysis, how to read the short-term charts. We're looking for trades that last anywhere from 3 days to about 30 days long. And we trade mainly ETFs. So we're looking for gold, miners, the hot sectors could be financials, technology, biotech, whatever it will be. And so you pretty much get whatever trade that we find that we put on. You'll get the trade alert saying, buy this ETF at this price or lower. Here's our first target, our second target. Here's our stop. And more or less, it just allows you to become a technical trader and follow proven strategies that allow you to, have the odds on your side and control your risk, because we focus on position sizing. Take this size of a position on your portfolio. So very straightforward for anyone to follow the markets and feel and understand what is going on in the markets. And that's what subscribers love, is this morning video at 8:30 in the morning. They have their coffee and they get an update, and they feel like they're, no matter how bad the market is, like during the market crash, people are like, oh my gosh, this video is, it makes you feel comfortable. We understand this is normal during panic selling, and, all these things come together. And so that's what people really love, is understanding and feeling the market, so they're in the zone. So when they put on trades, they're really comfortable with intraday swings and with daily moves. And we also have an investor newsletter. So when we do start a bear market, you'll get a signal how to profit from it using ETFs. When we're back in a bull market, you'll get a signal on, it's like long-term and passive investing. Buy this ETF, and allows us to kind of profit from falling and rising markets and outperform equities in general. So pretty straightforward. Just follow our lead.
Chris, thank you very much. Very informative, and we'll definitely circle back in like a couple of months. Let's see what's happening with gold.
Sounds great. Appreciate it. Thanks for having me.